In a groundbreaking event for the cryptocurrency market, Ethereum received over $1 billion in institutional investments in a single day, marking a historic shift in investor sentiment. What does this mean for the future of Ethereum and the broader crypto landscape? Let's explore. In the wake of this historic inflow into Ethereum ETFs, several possible scenarios may unfold. The recent approval of multiple Ethereum ETFs has marked a significant turning point in the cryptocurrency landscape. This influx is largely driven by institutional interest, as major financial players recognize Ethereum's potential beyond mere speculation. First, we can expect continued institutional inflows, which could lead to the launch of more Ethereum-based ETFs, further boosting market confidence among investors. This shift is indicative of a growing acceptance of cryptocurrencies in mainstream finance, as institutions begin to view these digital assets as viable components of diversified portfolios. Additionally, increased participation in Ethereum staking is likely, as more institutions seek to capitalize on the asset's yield potential, particularly in an environment of low interest rates. Price appreciation could align with Standard Chartered's target of $7,500 in the near term, reflecting a broader bullish sentiment. If this trend continues and Ethereum outperforms Bitcoin in percentage gains over the coming months, it could solidify Ethereum's position as the preferred asset among institutions, potentially reshaping investment strategies across the board. Meanwhile, retail investors should keep an eye on altcoins like Solana and Dogecoin, which are also experiencing upward momentum, suggesting a broader trend of diversification within the crypto market. In light of these developments, one must ponder how this institutional shift will reshape the cryptocurrency market landscape in the long run. The growing institutional adoption could lead to greater regulatory scrutiny, impacting market dynamics and investor behavior. As Ethereum continues to gain traction, it is clear that the next few months will be crucial for both institutional and retail investors as they navigate this evolving landscape with newfound optimism and strategic foresight. The recent surge in institutional interest towards Ethereum represents a significant turning point in the cryptocurrency landscape. Over the past few years, institutions have increasingly recognized Ethereum's superior yield potential through staking, which currently offers returns of approximately 3 to 4%. This attractive yield, combined with Ethereum's transition to a proof-of-stake consensus mechanism, has drawn a wave of institutional investors eager for passive income in an era of persistently low interest rates. Ethereum has firmly established itself as the dominant force in decentralized finance and tokenized assets, distinguishing itself from Bitcoin, which has historically been viewed solely as a store of value. Ethereum's capability to support a diverse range of applications, from smart contracts to non-fungible tokens, positions it as the backbone of the emerging digital economy. The landscape began to shift significantly following strategic decisions within the financial sector, including the controversial sale of Trump Jr.'s stake in ThumbsUp and the Office of the Comptroller of the Currency's endorsement of bank stablecoin partnerships. These developments have fostered greater confidence in Ethereum's ecosystem, signaling a maturation of the cryptocurrency market. Unlike previous Bitcoin-centric trends, Ethereum's growing institutional adoption reflects an evolving narrative that emphasizes its utility and relevance. The impact of this shift is profound and multifaceted. Increased institutional investment not only stabilizes Ethereum's market, but also enhances its legitimacy as a viable financial asset. As more institutions integrate Ethereum into their strategies, a ripple effect is anticipated, encouraging further innovations and use cases within its ecosystem. Looking ahead, Ethereum is poised to solidify its role within the financial landscape. As regulatory frameworks continue to evolve, Ethereum could soon become an integral component of traditional investment portfolios, shaping the future of digital finance. On June 19, 2026, Ethereum ETFs experienced an unprecedented inflow of over $1 billion in fresh capital, setting a new record for single-day investments. This remarkable surge marks a pivotal shift in institutional preference from Bitcoin to Ethereum, highlighting growing confidence in the latter's potential. The influx of capital was part of a larger trend, with total weekly inflows reaching an impressive $2.85 billion. Additionally, Perpetual's open interest on Ethereum surged by 19.7%, bringing the total to $945 billion. This indicates a significant increase in leverage betting on Ethereum's future performance, signifying that investors are increasingly willing to take on risk for the potential of higher rewards. The context surrounding this investment wave is crucial. Over the past few years, Ethereum has evolved from a platform primarily used for decentralized applications and smart contracts to a robust ecosystem that supports a wide array of financial services, including decentralized finance, DeFi, and non-fungible tokens, NFTs. This evolution has captivated institutional investors who are now recognizing Ethereum not merely as a speculative asset, but as a foundational component of the digital economy. The shift is particularly notable given that previous records for inflows were often dominated by Bitcoin, the original cryptocurrency. The implications of this investment surge are profound. It suggests a reevaluation of cryptocurrencies by institutional players, who are increasingly seeking diversification within their digital asset portfolios. Furthermore, Ethereum's advancements, including ongoing upgrades to its network aimed at improving scalability and reducing transaction costs, are enhancing its appeal. This newfound institutional interest could lead to increased stability in Ethereum's market, potentially attracting even more investment. Looking ahead, the outlook for Ethereum appears promising. As major financial institutions continue to embrace Ethereum-based products and services, the network is poised to solidify its position as a leader in the cryptocurrency space. Analysts predict that if this trend continues, we may witness a sustained period of growth for Ethereum, further distinguishing it from Bitcoin. This surge in institutional confidence indicates that Ethereum could soon become the preferred choice for digital asset investment, paving the way for innovative applications that may redefine the future of finance. As institutional interest in Ethereum surges, how will this reshape the cryptocurrency market landscape? Share your predictions in the comments below and subscribe for more in-depth analyses on emerging trends.